Hello and welcome to our modern money journey. Just a brief reminder that I am not a licensed professional. This is not investment advice. This is for entertainment purposes only. Hello everyone and welcome back to episode 3 of the Build a Portfolio series from our modern money journey. Jumping on into things. As you can see, the other day I deposited the $100 so that we could make this month's purchase. We have now deposited $300. We are sitting on a little over $14 in gains from our stocks, which is about 4.8%. And then we have also received 65 cents in dividends so far, which we received from owning our one share of Seagate Technologies. So currently we're sitting on about $185 of purchasing power. So that's our cash position. And then all of our shares together are worth about $130. So that makes up our total account value. So looking at our individual shares, or our individual positions, we have one share of Virgin Galactic Holdings, and we are up about 34% on that, or about almost $6. For Seagate Technologies, we have one share. We are up a little over $3.50, which is about 7% that we're up. And then Intel, we own one share of Intel, and we're up almost $5 on it, which is about a 10% gain. So overall, we're doing pretty good. We're up on every position, and yeah, that's what we were aiming for, so we're doing pretty good. However, you may notice that our portfolio is a little heavy in the tech sector. In one way or another, these companies are technology related. So we need to balance out our portfolio a little bit and diversify a little bit. And we need to get away from technology. So we need to get more into something raw, like raw materials or commodities. And if you've, watched previous videos from the channel, you know that I'm a big fan of commodities. And the two commodities that I'm the biggest fan of are silver and gold. So why am I, so bullish on silver and gold and commodities in general? Well, let's just take a look at some info real quick. The corporate bond market is basically broken. Companies are just riddled with debt that they can't pay. So they have, sold tons and tons of bonds that they can't pay. The U.S. bond market, the government bond market, has yields so low that they don't keep up with inflation. So basically the bond market, the traditional safe haven market, is a no-go. The U.S. stock market is ridiculously overvalued. And I'm sure some of you are like, oh yeah, but that's just because of the recent Roni situation. No, even prior to it, the stock market was significantly overvalued. If you look at, this metric that they're talking about, the stock market's market cap to GDP ratio is and has been overvalued for a while. The stock market has been overvalued for a while. Then we can also see here the ratio of the commodity index to the S&P 500. Commodities are undervalued in comparison to the S&P 500. So the S&P 500 is high, or stocks or equities are high, and commodities are low in comparison to each other. And then we've also got the Federal Reserve pledging to just keep printing and printing and printing to prop things up, and they're going to keep printing money. And they're going to keep interest rates low till at least 2023, near zero till 2023, probably longer. So the bond market's crap, the stock market's mostly shit, the Fed's going to keep printing money. That's why I'm bullish on gold and silver. Let's take a look at the price of gold. So this is the price of the gold over basically the last 2 decades. And as you can see, the last time gold peaked out, like we just put in a new recent high, all-time high, but the last all-time high was just a few years after the 2008-2009 housing crash. And while the rest of the markets were still low and just barely recovering, gold was setting in all-time highs continuously, while the stock market and everything else in the housing market were barely beginning to recover. We're setting in all-time highs for gold. We just set a new all-time high, and if you look at this chart, I genuinely think that this here will be like this point, and that this point here will be like this, and that we will, come down a little bit from this point, and then we'll have an extended multiple year bull market where gold just goes higher and higher and higher if we were to extend this chart out over here. So if you are bullish on gold, why not own the gold mine? So that's what we're going to talk about. Barrick Gold. Barrick Gold is, as the name would suggest, a gold mining company, but they also produce copper. Looking at their 1 year chart, we can see that their price, has gained significant value over the last year. I'm sure some of you have seen the news about Warren Buffett getting into Barrick Gold, many other big investors getting into gold, getting into Barrick Gold Corporation, ticker symbol GOLD, gold. So yes, their price has been increasing over the last year, but if we zoom out to their max chart, we can see that their price is still pretty low in comparison to the last time when gold was hitting its highs. Gold was hitting its highs in 2011 and 2012, its last all-time highs. Like we set new all-time highs recently, but the last set of all-time highs, the last bull run that it went on, where it continuously for years set new all-time highs, when it peaked out in 2011, which here is where Barrick peaked out. So we are low in comparison to where we could be. Also, we can see our trailing PE is 11. That's great. That's really low. We have about a 1% dividend yield. That's great. We're going to be getting some cash flow, and we can be expecting the price of this to go up over time. But let's also, while we're talking about this dividend, let's look at some of this dividend data. So their payout ratio is under 26%. That's really low. That's great. They're not extending themselves too much. They're not paying out too much of their earnings as dividend. They have cash on the books that they can use to grow, make deals, acquire new mines, improve new mines, improve the mines, do whatever they need to do to keep mining gold, keep mining copper, keep producing their commodities. And if the price of those commodities goes up over the next couple of years, then the cash flow that they're making is just going to go up. So yes, this isn't attractive. Yes, this isn't attractive, but let's actually look at their dividend history. And let's extend this out so that we can see the last time that gold was setting all-time highs. We had a couple years where they were paying out significantly higher dividend than they are now, over double the dividend what they are now. So we can purchase some shares now, lock in at a lower price, and then hope, or not necessarily hope, we see from the underlying turbulence in the other markets that there's a strong likelihood that money will be flowing into the gold market, because the other markets aren't looking safe. They aren't looking secure. Anyone looking for a safe place to put their money is likely going to put it into gold. It's just always been treated as a safe haven asset for many traditional investors. And when the other markets start looking shaky, it's what people do. It's what traditional investors do. It's what big smart money does, is take it out of stocks and bonds, not all, but a portion of their money, and then put it into gold. So I believe gold's likely to go on an extended bull run. So let's buy the gold mine and profit off of that over these next coming years, and profit over that bull run in gold. So let's go back to Webull. Let's come over here and go to trade. So we can come down and we're going to do buy. We'll do a limit. Let's see what the current price is. Let's refresh. Okay, 27.52. And then let's do buy. Let's do 2 shares. So it's going to cost us $55. So let's unlock to place our order. And then let's place our order. Yep, and let's buy those 2 shares. Alright, so we've placed it as a limit order. And it just got filled. So let's go back to our account. There we go. So now we are sitting on 1 share of Intel, 1 share of Seagate, 1 share of Virgin Galactic Holdings, and 2 shares of Barrick Gold, which we can hopefully profit off of this upcoming gold bull run from. Alright, all you bulls and bears, I'll see you next time.